Okay, Bismillahirrahmanirrahim. Let us start. In today's lecture, actually, we are not discussing the test. From next Sunday onwards, inshallah, we'll be discussing the test and time period of the, I would say the duration of the class will also increase from the coming Sunday. From coming Sunday, the duration of the class will be at least 2 hours. We'll be discussing test and the topics as well. In today's class, we will be discussing the topic APV, adjusted present value, each and everything about APV. Even if the APV comes in overseas investment appraisal, then what to do. But just I mentioned from the next week, next Sunday onwards, coming Sunday onwards, the time period of the class will increase and we'll be discussing inshallah test as well. And you people, and also today we will also discuss a little bit about the result as well. So what sort of mistakes students they make, that's why they're not successful, and what actually you have to do in order to pass the paper. And let me tell you one more thing. The highest passing rate in optional paper, two papers are having the highest passing rate. One is ATX at 48%, second is AFM 45%, and the rest of both the options are having passing rate just 34%. So you people are just lucky you opted the one of the optional paper which has the second highest passing rate. So actually just I'm spending 5 minutes where students they make mistake in AFM, why they are not able to pass the paper, and where students they do each and everything right to pass the paper. Actually in AFM, obviously you have to be very good, number one, in report writing. Now, I would say more than 80% students, what do? They don't try to write the report. They don't practice of writing the report. Once you have attempted the question, you have understood the report, that's fine. But you need to practice. You need to practice. You have to write it down. I would say more than 80% students, they don't practice the report. That is why the problem, the failure ratio. But one of the causes of failure is not practicing the report writing. You have to do it. So it's not the teacher who has to practice, you have to practice. The more obviously practice you will be doing in report writing, automatically you will become in a position to get really good marks. Second area is not completing the entire paper. You have to try to attempt 100% paper. No matter you are having a really good grip or bad grip, whatever comes in your mind, please try to attempt the paper, because we don't have any negative marking. So if someone is leaving around 20-25% of the paper, that is obviously another reason of failure. So try to attempt the paper 100%. Even you are thinking that you are doing something wrong, but still do it, because you never know that you could be right also. So try to attempt the paper 100%. Third mistake, and those students they don't do that mistake, obviously they easily pass the paper, not properly attempting tests. If you're not properly attempting the test with the honesty, obviously uh, it's not possible to check around 11 to 13 tests of each and every students. So you have to be really honest whenever let's say our college is sharing the test with you. Always try to attempt the test. Always try to attempt the test within a time bound condition. And the time bound is very simple. 1 mark means 1.8 minutes. So within 1.8 minutes, you have just 1.8 minutes for the 1 mark. So those students, obviously, they are in the last session, the previous session, they properly attempted the test. They got a really good result. But if you are not attempting the test, so that is another, I would say, one of the causes of the failure. Fourth reason of passing in the failure is mock. Obviously, those students. Yes, yes. As I mentioned earlier, from the coming Sunday onwards, we will start discussing the test, inshallah. Plus, I said, let me repeat again. From the coming Sunday onwards, the time period of the class will also increase. At least it will be 2 hours from the coming Sunday, inshallah. So the fourth one is mock. See, those students previously they took the mock very seriously. They gave the mock because when we share the mock with you, we just give you 3 hours and 15 minutes. So within 3 hours and 15 minutes, dear students, you are supposed to attend the mock and submit to us. Because if I share the mock with you and you are submitting it to me in 1 week's time, it's useless, seriously. So you have to take a little bit pain and you have to come a little bit under pressure. You have to attempt the mock within 3 hours and 15 minutes. In order to get a really good result, you have to do that. Then another thing is at least practice recent, I would say 6 attempts. So you at least need to practice recent 6 attempts past paper. Actually, if you are attempting the recent 6 attempts past papers, see, only obviously those attempts past paper they are available. If XYZ attempt past paper is not available, do not worry about that at all, please. So whatever the recent past papers are available, you need to attempt them. Whatever recent past paper you need with answers, all you need is just do one thing. Just send the message in your relevant WhatsApp group. Ask the admin that please share the recent past paper with answers. So admin will do that. But you have to take the initiative. So these are the reasons students they pass AFM, and these are the reasons students fail as well. Those students they are practicing report writing, practicing that makes them pass the paper. And I said, sorry to say, around 80% of the students they don't practice report writing. One of the causes of failure. Another is attempting 100% paper. You need to attempt the paper 100%. No matter right, wrong, I don't care, but you have to attempt the paper 100%. Obviously, those they are attempting the paper 100% automatically, chances of passing the paper are very, very high as compared to a student who did not. And those they're not attempting the test, those they're not attempting the test. Time breakup is very easy, as I mentioned. 1 mark, simple. Keep it very simple. 1 mark, 1.8 minutes. A very old formula. Simple as that. 1 mark, 1.8 minutes. 15 minutes you have additional. Now it's up to you. For example, which section you want to attempt first, just spend 15 minutes on that. We'll be discussing which section should be discussed later on. But this is the formula: 1 marks, 1.8 minutes. So those students, they are not attempting. Those students, they are not attempting the test properly. Obviously, that is another causes of failure. See, if an institute is willing to take your test, so you should obviously, I would say, get the benefit from this opportunity. And mock, obviously, if you are properly attempting the mock within the time bound condition, that automatically chances of passing the paper they become very high. And the recent 6 attempts. So if you're following all these things, if you're following all these things which I've just written, 5 steps, automatically you can easily pass the paper. But any one of them is missing, then obviously it becomes difficult to pass the paper. Another thing is watch all lectures. Skipping the lecture will never help you to pass the paper. Skipping the lecture will never help you to pass the paper. You have to watch all the lectures. Because even there are practice videos, there are course videos, you have to watch all the lectures. Skipping lecture will not help you at all. So you have to focus on these areas. And another thing is, whenever I mention in the lecture, for example, if I'm after discussing something, if I'm mentioning that please read the answer of that question, read the answer of part A, part B, you have to do that. You have to do that. There's a reason why if I'm mentioning, so you have to do that. Now there are some of the students, what do? They don't do that. They don't read the answer. That is another causes of a failure. Never do that. When your mentor is saying something, when your teacher is telling you something, you have to follow that. Because dear students, we have spent, I would say, more than half of our life in this profession. And after spending such a great amount of, I would say, life, if we are giving you any advice, you should follow that. So if teacher is saying, read the answer, you have to do that. So these are the reasons of passing, and those they are not following these things, obviously that results in the failure. So it was very important to mention. Another thing is a good thing which I've seen in AFM. Previous two sessions, the passing rate overall was 42%. Now it has jumped to 45% overall, which is very, very good. And to be very honest, I've seen number of my students clearing this paper in the first attempt, which is excellent. And obviously, those students they have done all these 6 steps properly. They face no issue at all. Like in the previous session, there was one question on the topic ratio analysis. It came in exam, and to be very honest, believe me or not, in our 11 test, one test was on ratio analysis. Now just imagine those students they attempted that test, so they got very lucky in exam. So actually, you need to follow each and everything. Now let's quickly go and discuss APV. Adjusted present value, APV. The first thing which we need to discuss is actually where do we need to use APV? Adjusted present value means conditions. Where actually we are using APV. Now, number one, a very, very important point. See, actually, we know that we do discuss in FM also that superior investment appraisal technique. Superior investment appraisal technique is NPV. But whenever significant financing side effects comes, whenever the situation arises where we have significant financing side effects, then instead of NPV, we go for APV. Repeat. Then instead of NPV, we go for APV because NPV cannot easily deal with, you can say NPV cannot properly deal with financing side effects. So NPV actually cannot deal with properly with financing side effects. So you have to go towards APV. So actually, when it comes to adjusted present value, the very important thing, obviously, your project can be core or even you can say non-core activity. So it means if the project is core or non-core activities, in both the cases, APV can be used. So it means the condition number one will always be met. Either you will be investing in the same line of business or in a different business. Non-core activity means we are talking about diversification. But a very important step or condition comes when there is a significant debt financing. When there is a significant debt financing. When I say significant debt financing means I'm thinking, for example, let's say assuming 80% of the project is financed by debt. Or sometime you people might have noticed that 100% of the project is financed by debt. So that is actually significant debt financing, and you should not be worried about that significant. By reading the question automatically, you will come to know that yes, organization has used a significant debt financing. But normally, just to make it quantifiable, I'm not saying 51 or 52%. I'm thinking for 75, 80, or maybe 100% of the project is financed through debt financing. Another thing is issue cost. It could be issue cost of equity or debt or even both. The question is basically how to deal with the issue cost. NPV doesn't know the answer. NPV will not be able to deal properly with the issue cost. So where the issue cost of debt, equity comes or debt comes or even both, it is possible there is an issue cost of equity as well as issue cost of debt in the same question. So NPV cannot deal with that properly. So APV can easily deal with the issue cost of equity or debt or even both. Another thing is extremely important point is subsidized loan. Subsidized loan. Basically, we're talking about subsidized interest rate. For example, the market interest rate, the normal interest rate is 12%. But right now, government is willing to give you the loan at 5%. So how to actually exactly deal with the subsidized interest rate? NPV does not know the answer. APV exactly tells you how to deal with the subsidized interest rate, subsidized loan. So obviously the condition number one will always be met, but the rest of the conditions, obviously they're extremely important, because sometimes what happens, examiner norm, there is a, what are the ways in which these conditions can be examined? In the past paper, there's a question where examiners said in part one, calculate APV. Then in part B, he said, he asked that justify why APV is appropriate. So you have to write all these reasons. So due to obviously having significant debt financing was there in the question, issue cost was there, subsidized interest rate was there. That is why APV is justifiable, because NPV cannot deal with these areas. And sometimes examiner what he does, he just gives you the question, and in the requirement he says, just tell us the financial acceptability. An examiner is not mentioning should I go for APV or NPV. In that case, you have to see these conditions. If these conditions are met, then instead of NPV, you will go for APV. So simply these conditions are going to help you in different ways. Now, if I talk about APV, adjusted present value, actually, we always say APV is the combination of two NPVs. Repeat, APV is the combination of two NPVs. Number one. Number one is base case NPV. Another name for the base case NPV is NPV of investment. NPV of investment. Another name for the base case NPV is NPV of investment. Basically, while calculating base case NPV, which is a very, very famous thing, obviously everybody knows that. But NPV of investment, I believe hardly people they have the knowledge of this thing. So basically, while calculating base case NPV, we always assume 100% project is equity finance. Why do we do that? I'll explain that inshallah right now. So while calculating base case NPV, what do? We assume project is 100% equity finance. Since we are assuming project is 100% equity finance, then what do? Then cost of capital. Cost of capital is just KE. And to be more precise, in KE, RF plus RM minus RF beta equity. So logically, instead of beta equity, instead of beta equity, since we are assuming while calculating base case NPV that project is 100% equity finance, then the same formula changes for us only for base case NPV where we assume that project is 100% finance, then KE is equal to RF plus RM minus RF and then beta asset. Actually, in base case NPV, instead of beta equity, we use beta asset because we are assuming the project is 100% equity finance. So I will not be using beta equity, I'll be using beta asset. And when you are using beta asset, it means you can say one thing. While calculating base case NPV, we're just considering business risk. We are just considering operating risk, operational risk. We are just working on operating cash flows. Obviously, we are not considering any financing cash flows. We are not considering the effect of financial risk. We are not considering the effect of financing side because we are assuming that project is 100% equity finance. So instead of beta equity, I'll be using beta asset. It means that, now listen, if there is a diversification, obviously, we know that diversification means making investment in a non-core activity. Repeat. Diversification means making investment in a non-core activity, doing something different. Okay. Making investment in a new line of business. Fine. In case of diversification, actually what happens? We need a beta asset of new industry. Until unless you don't have the beta asset of the new industry, you won't be able to obviously solve the question. How do we find beta asset of the new industry? One possibility that examiner gives you directly, the chances are next to zero. Normally what happens, examiner gives you the data of a proxy company. They are already in the new, they are already in the operating in the industry where you are planning. The industry which is new for you is not a new industry for the proxy because they're already operating in that industry. All you need is take beta equity of proxy company, de-gear, and get what? Beta asset. And once you have found the beta asset, once you have de-geared the beta equity of a proxy company, you have the beta asset. Please use that beta asset as it is in capital asset pricing model. Why? Because in base case NPV, we are assuming the project is 100% equity finance. So even in exam, some of the students, they just make mistake. What do? They obviously de-gear the beta equity of the proxy company, and after getting a beta asset, the mistake which some of the students do, what do? They gear up this beta asset with their own gearing. Absolutely incorrect. You're not solving NPV question, you're solving APV question. So you're not solving NPV, you're dealing with APV. So in APV, once you have a beta asset, please use that beta asset as it is in capital asset pricing model. So this is a scenario of diversification. And obviously, it's not necessary that all the time you will be facing a scenario of the diversification. It is also possible that you are making investment in a core activity because look at this. Project can be core or non-core activity. So non-core means diversification. What if you are making an investment in core activity? What do you do? Listen. When when investing in a core activity. Now that is something very important. Now listen, students. Obviously, there are two possibilities. Number one. Number two. When you are investing in a core activity, when you're investing in a same line of business, but obviously due to significant financing, debt financing, due to issue cost, subsidized interest rate, you have to go towards APV. Now, what will be the, I would say, approach of solving base case NPV in case of when we are making investment in a core activity? What do you have to do? Take own company. Own company is beta equity. D gear. You will have beta asset. Now, this beta asset will be used in capital to calculate KE. Obviously, there are two possibilities. One could be diversification, and another possibility that you are making investment in a same line of business. When you're making investment in a same line of business, try to understand now. What do you have to do? You have to take beta equity of your own company. D gear. It gives you beta asset. Once you have the beta asset, please use that beta asset as it is in capital asset pricing model. Now, the third possibility, APV in FDI, foreign direct investment. APV in foreign direct investment, like you people have, I strongly believe that every one of you have, I would say, must have attempted Tremont company. Adjusted present value in foreign direct investment. Let's say you are making investment in an overseas company, overseas country. When you're making investment in overseas country, I have mentioned even my lectures as well. Whenever there is a foreign direct investment, when you are making investment in an overseas country, you have to always use risk adjusted back. Always, even you are doing the same business, you will be selling the same product in an overseas country. Still, you have to use risk adjusted back in case of NPV. Why still you have to use? Why you still have to use risk adjusted back? Because as I mentioned in my lectures also, when you are operating in an overseas country, legal environment and economic environment and the culture, each and everything is different. So obviously the business will not be same. But what happens? How do I calculate a risk adjusted, I would say, K in case of APV? Normally what happens now in FDI, there are two possibilities. So far I have seen question on one possibility. There's two possibilities. Let's say your organization has decided to go for FDI, foreign direct investment, and examiner has asked you to calculate APV of the project. Now there are two possibilities. One possibility, proxy company, beta equity in overseas is given to you. There's a possibility. If this is given to you, then things are extremely easy. All you need is take the proxy company's beta equity and obviously the financial gearing of the proxy company, the company which is already operating in an overseas country. All you need is take the beta equity, financial gearing of the proxy company and de-gear. It will give you a beta asset. Then simply use that beta asset in K to calculate K. But that is one possibility. That the question which is in front of you is FDI, foreign direct investment, in case of APV. Okay. And let's say examiner is giving you a proxy company's beta equity, the proxy company which is already operating in overseas. All you need is do one thing. Take the beta equity of the proxy company, de-gear, and get the beta asset. And then you need to use the beta asset as it is in KE, because while calculating base case and NPV, we assume that project is 100% equity finance. But there's a second possibility also, which we have seen in case of Tremont company, that you are making an investment in an overseas country, but examiner has not given you the proxy company's information. If proxy company information is not given to you, then what you have to do in that case, take your own company's beta equity, then dig it. You will get a beta asset. But normally, now listen and listen carefully. Obviously, this beta asset is representing existing business risk. Try to understand. You're making investment in overseas country. That's a foreign direct investment. Examiner has not given you the proxy company's beta equity. What you did, you took your own company's financial gearing, beta equity, you de-geared the beta equity, now you have a beta asset. Now listen, logically, this beta asset is actually representing the existing business risk. And it is quite obvious when I'm making investment in an overseas country, even though I'm doing this, I'm going to do the same business in an overseas country, but my business risk will definitely changes. My business risk will definitely change when I'm going to make investment in an overseas country. That is why you people might have noticed, normally what examiner says, he gives you the information to adjust that beta asset. For example, assuming you have de-geared beta equity and your beta asset, I'm assuming your beta asset is, let's say, 1.4. Now there's a possibility that examiner says the beta asset for the new investment will be 0.2 higher than your existing beta asset. So all you need is, you have computed the beta asset by using your existing beta equity. Then simply do one thing. Simply add the value which examiner has mentioned. Now the examiner is saying your beta asset will increase by 0.2, just add 0.2. So things like that we have seen in Tremont company. So it means in capital asset pricing model, instead of using 1.4, I'll be using 1.6. Now I'm telling you one more thing. Now listen, students. I'm telling you how to get one professional marks if something is missing. For example, you people are solving APB question. The scenario is of, let's say, APB. Okay. A foreign direct investment question is in front of you, and examiner is not giving you any proxy companies information. So what do you have to do? You have to use your own existing financial gearing, use your beta equity to de-gear, and you have, let's say you have computed beta asset. And examiner has not given you any other information at all. Nothing is mentioned. How should I adjust my existing beta asset? If nothing is mentioned, it means now you are compelled to use your existing beta asset, and you have to use it. But after using your existing beta asset into capital asset pricing model, after calculating base case and even your APV, base case NPV and financing side effects and APV, after that you have to write. What you need to write? You need to write that instead of using our own beta asset, we should have used the risk adjusted beta asset. Because that is skeptical. Why skeptical? Because you can say that the actually using own beta asset in a situation where we know that business risk has changed, so obviously it is not logical. So you need to mention in your exam that using own beta asset in such a situation is not logical. So if things like that, it comes in exam and you are mentioning, you will get one professional marks. So these are the possibilities in case of base case NPV. Now, let's say you have calculated base case NPV. As I mentioned that APV is the combination of two NPVs. One is base case NPV. Another is the NPV of financing side effects. Now, how do we actually calculate NPV of financing cash flows? Now, this is very interesting, and I'm really surprised also. Sometimes students, they just get confused, and there's even no need to get confused on anything. For example, The one thing which you need to calculate is present value of tax savings from interest payments. Obviously, when we are paying the interest results in tax saving. So you need to calculate present value of tax saving from interest payments. Okay. Second, in case of subsidized loan, you need to calculate present value of post tax subsidy benefit. Now listen. Please now listen and listen carefully. Please listen it. Don't get confused at all. For financing cash flows, discount factor. Actually, it is written by the Miller and Modigliani. They are the inventor of this technique APV. For discount factor, you can use RF, the government bond rate, or you can go for normal YTM, normal KD. It is up to you what your examiner does. Sometimes he uses YTM, sometimes he uses RF. But you are not supposed to get confused because it is mentioned in the technique. There is no such thing mentioned in the technique when to discount financing cash flows by using RF, when to discount financing cash flows by using KD or YTM. It is not mentioned at all. What is mentioned, which I have written? Actually, the Miller and Modigliani, they say it is, there are two possibilities. Either you can use RF. Logically, this RF will be the government bond rate and it will be given to you. The second is normal YTM. If you ask me, most of the time I'm more, I would say, I'm more in the favor of using normal YTM. But someone uses RF, government bond rate, that is 100% acceptable. That is 100% acceptable. There is no problem at all. So sometimes what happens that you might have attempted 2 to 3 questions, and let's say I use YTM and the examiner has also used YTM. If you come to the next question, if I'm using YTM and the examiner is using RF, then you start getting confused, which is not good at all, obviously. When your teacher is telling you and your facilitator is telling you that you can use any one of them, then please don't get confused at all. So financing cash flows, you can discount either at YTM or RF, and this RF will be the government bond rate. So actually, it is just up to you. Another thing, please listen. If there is an overseas investment appraisal in case of APV, which happened in Tremont, actually in FDI, foreign direct investment, if you are calculating APV, and let's say you need to discount financing cash flows, and let's say your domestic country's interest rate is given, means your normal YTM is given. An examiner has also given you the overseas country's interest rate. Now listen and listen carefully. For discounting financing cash flows, if you're using YTM, it has to be your own countries, your domestic country, your local countries interest rate, simply the interest rate, the YTM which you have in your home country. Why? Because dear students, we don't calculate APV actually in overseas. What do? We remit all the cash flows to the home country. So the final step of discounting is performed in the home country. the discounting is not performed in overseas. So please try to understand, in case of overseas APV, when you are discounting the financing cash flows, you have to use the YTM which is available to your company in your domestic country, not the interest rate which is given to you in overseas country. So that is another very important, I would say, concept. Now, when we calculate APV, adjusted present value, what do? We take base case NPV, which could be positive or negative, depends on the question. Then simply we add present value of tax savings from interest payments. We add present value of post tax subsidy benefit. Okay. Now listen, sometimes what happens, the present value of post tax subsidy benefit becomes very interesting. How it becomes very interesting? Now listen. For example, the project life is 4 years. Okay. But examiner says tax is paid with a delay of 1 year. Now actually, present value of post-tax subsidy benefit becomes very interesting, because we have no problem in this present value of tax saving from interest payment. Basically, your present value of tax saving from interest payment, how do you calculate? Obviously, you will have to take the interest amount. Let me explain here. Okay, this is a situation. For example, we need to calculate present value of tax saving from interest payments and post-tax subsidy benefit. What do I do? For calculating present value of tax savings from interest payment. Listen, I'll take the amount of loan into interest rate, whatever interest rate is applicable, depends on the question, into the tax rate. Obviously, loan into interest rate gives me the interest payment amount, tax rate gives me the saving. But after that, I just need to multiply. Annuity factor, can I say from 2 to 5? Why 2 to 5? Because we are paying the tax with a delay of 1 year. So your first saving will arise in the second year. So present value of tax saving from interest payment, take the loan into interest rate, whatever applicable interest rate is there, into tax rate annuity factor. So this is very simple. But as I mentioned, calculating present value post-tax subsidy benefit, it becomes interesting. How? Now I need to calculate present value of post-tax subsidy benefit. What do you have to do? Now listen. Now you have to calculate this in 2 steps. Actually, step 1, you need to calculate present value of just subsidy benefit. Now listen, how will you calculate present value of subsidy benefit? Of course, loan into subsidy benefit percentage. Loan into subsidy benefit. For example, there is a subsidy benefit of 2%. Then you need to multiply loan with the subsidy. Then you need to multiply loan with that 2%. If subsidy benefit is 3%, multiply the loan with the 3%. Now, after that, multiply this with annuity factor from 1 to 4. Because the benefit is 1 to 4, but the problem arises, you need to calculate separately. Okay, whatever the amount comes here. Now, you need to calculate separately present value of tax payment on subsidy benefit. And actually this will be, now you will be using annuity factor from 2 to 5. Why 2 to 5? Because tax will not be paid in year 1. Tax is paid with a delay of 1 year. So present value of tax payment on subsidy benefit. Obviously what you have to take the loan into subsidy benefit percentage into tax rate that gives you the tax payment into, now annuity factor will be 2 to 5, and that will be deducted from the above value to get the final answer of present value of post tax subsidy benefit. And it only happens when tax is paid with a delay of 1 year. So actually, when tax is paid with a delay of 1 year, then the post present value post tax subsidy benefit becomes little bit interesting. All you need is calculate this value in 2 steps. In first step, you need to calculate present value of the subsidy benefit, and in the second step, you will be calculating a present value of the tax payment. So you should not be getting confused. You have to be confident. Even in exam, even in the test, even while doing practice, if you're making 1 or 2 mistakes, it's okay. But losing the confidence basically gives you then 0 marks. So instead of getting a 0 marks, it's very good to make 2 to 3 marks and still get out of 25. If you can manage to get 17, 18 marks, this is very, very good. I would say. Even if someone is getting 16 marks, even 15 marks out of 25 is still really good. But losing the confidence on a tiny things, on a small things, so that's not a good thing at all. Just you need to, okay, obviously, if you're not paying the tax with a delay of 1 year, then you can directly calculate. Then there's no issue at all. For example, if tax is paid in the same year, then obviously there's no problem at all. How we will calculate present value of tax savings from interest payment? It becomes very, very simple. Just take the loan into the interest rate, into the tax rate, into annuity factor, assuming 4 years. Here, this is your answer. Now, how will calculate the present value of post tax subsidy benefit? Directly you can calculate if there's no delay. Take the loan now into subsidy benefit percentage. Okay, now try to understand. I need to calculate present value of post-tax subsidy benefit. Now listen and listen carefully. I'm just putting the values. Assuming the loan amount is $1 lakh. Subsidy benefit is 4%. Okay. Now listen. I need post-tax. Post-tax. Now try to understand. If the tax rate is 30%, if the tax rate is 30%, it means the post-tax benefit will be 70%. Because 30% you are paying the tax. If the tax rate is 20%, then present value of the post-tax subsidy benefit will be 80%. So assuming the tax rate is 30, I'll multiply this with the 70%. Altogether, this calculation is very different from the above one. Look at this. Here, what is happening? The loan into interest rate into tax rate. Here, what I'm doing? I'm deducting the tax rate and the remaining percentage, whatever comes, I'm multiplying with that. So if the tax rate is 20%, I would have multiplied with 80%. So loan subsidy benefit percentage, then simply you can do one thing, 1 minus tax rate. When this direct step is applicable, when you are paying the tax in the same year. So some of the students are just confused for no reason. They mix these 2 steps. Both are very different. Look at this loan interest rate, tax rate, tax rate. Look at this loan benefit percentage, and this is 1 minus T. Both calculations are not same. Both are different. Obviously, you have to pay the tax. Your APB is after tax. Come on. Each and everything comes after tax because, is that clear? On when you are earning, you have to pay tax. Yes or no? Is that clear? Now listen. Now simply deduct issue cost. If issue cost of equity is given, then deduct the issue cost of equity. If examiner says the issue cost of debt, then deduct the issue cost of debt. Or if examiner has given you the issue cost of both, then simply deduct the issue cost of both. So finally, you will get APV. If your APV is positive, then financially the project is acceptable. If APV is negative, then financially project is not acceptable. And I did mention the interpretation of APV and NPV is same. Both the techniques, they measure the change in the wealth of shareholders. Obviously, the APV is positive, wealth of the shareholder will increase. APV is negative, then the wealth of the shareholder will decrease. Another thing, now dear students, most of the time what your examiner does, that is his practice, he normally assumes that issue cost is financed internally. That is the normal assumption. Even though if someone is assuming that issue cost is also let's say financed externally, that is acceptable. But since most of the time the examiner is assuming that issue cost is financed internally, then what do you have to do? For example, issue cost examiner is saying it is 2%. So dear student, whatever you have invested initially, it will be treated as 98%. Most of the time, this is what we do. So how will you calculate the issue cost? Simply, I'm just assuming the invested amount is 2,50,000. Take that invested amount, then multiply by 2 upon 98, gives you the issue cost. If your issue cost is 4%, it means whatever you have invested, that is 96%. In 98, 99% questions examiner does this 99%. So whatever you have invested, if the issue cost is 2%, then the normal assumption is whatever you have invested, it is 98%. Simply multiply that with the 98, multiply that with the 2% divided by 98 gives you the issue cost. And issue cost, you should mention even in exam, we normally assume that issue cost is financed internally. So I hope I have tried to cover each and every corner of APV. Now, can you just quickly write in the chat box how many lectures you people have seen, please? In each group, we have different groups of students, English as well as Urdu. So can you simply and quickly write in the chat box how many lectures each one of you have seen? Abdul Rafi 58 is good. Farah is 42 is also good. Abdul Rafi 58 is really good because in Urdu is you just need to see 2 to 3 more lectures to complete the course. Mashallah. So dear students, just those students they join us a little bit late today, please must listen today's class because we did mention why student what causes them to fail the paper and what actually helps them to pass the paper. So inshallah, as I mentioned earlier also, from coming Sunday onwards, we'll be having a 2-hour class and each and every minute, inshallah, of class will be very, very productive. One will be discussing the test and then much more revision as well. Each and every minute, inshallah, I'll make it productive so that obviously your time should not be wasted. Or Abdul Rafi, you can call me in the night, not to right now, because right now after this I have a class. I think that's SB or maybe ATX. If you call me at 10 o'clock in the night, it will be fine. Around 83. That's excellent. That's excellent. Excellent. I think you are also about to complete the course, mashallah. You are also about to complete the course, I believe, which is really good, because the sooner you people can complete the course, you will have more time to practice. You will have more time to practice. And I just want to end the session on this note. Please, in your respective groups, try to motivate other students as well, that they should come up for the live classes to get a benefit, most out of it. For getting a really good benefit, you should take the live class, obviously live, because recording will be available, inshallah. But to get more benefit, you should come online. So please motivate them, so that from coming Sunday onwards, inshallah, we'll be having a 2 hours class, and I'll try my best to make it more productive. So thank you very, very much for coming up this class. Thanks a lot. Have a nice life.